Gold has been a store of value for over 5,000 years, but in a world where money moves instantly and crypto markets run 24/7, gold has largely remained locked in vaults and traditional financial systems. Kurt Hemecker is trying to change that. He's the CEO behind DGLD, a project bringing physical gold onto blockchain rails so it can move more easily through digital markets. We spent years talking about stablecoins putting dollars on chain. Kurt believes gold could follow a similar path, not as speculation, but as something that becomes far more usable in the digital economy. Kurt, welcome to Token for Your Thoughts.
Thank you. It's fantastic to be here, Lindsay. Thanks.
Yeah, it's great to have you today. So before we dive in, it would be great to hear a little bit about you and your background. What were you doing before crypto and what brought you into the space?
Thanks. But I was listening to somebody else speak the other day, and they said something that really resonated. It probably resonates with a lot of folks, and that is basically you don't find crypto; it finds you, and I think that
Interesting.
happens
I like
to
that.
yeah. Um,
Yeah.
so I've spent a lot of my career at the intersection of payments, crypto, and financial infrastructure. I worked in a startup company doing mobile payments. After 9 years, it was acquired by PayPal. So I was with
Cool.
PayPal for a while, and then I was part of the founding team on the ground for the Facebook-backed Libra project, later rebranded as DM. And then I've worked in blockchain more broadly. I was before joining Gold Token SA or GTSA. I was CEO of Mina Foundation, which was focused very much on zero knowledge proofs. So, kind of the common thread for me has always been how can we make financial assets more useful, more global, more accessible, and with DGLD, that's our digital gold token. It's kind of a natural continuation of that journey. I think, as most listeners and everyone knows, gold is one of the most oldest and trusted financial assets in the world. Blockchain is a relatively one of the newest forms of financial infrastructure. So, kind of what excites me is how do we bring these two worlds together? So, it's by making
Hmm.
real physical gold usable on modern digital rails.
Hmm.
Kind of
Yeah.
the tagline we say is old asset, new rails, institutional trust.
Hmm. Yeah, I love the contrast between, like you said, one of the oldest assets coming together with this, the new technology. Do you remember the first time blockchain sort of clicked for you or that you saw the opportunity in it? A lot of people dismissed crypto early on. What made you think there was actually something worth building around?
So, like many people, it was um, just around the time of the launch of the initial Satoshi white paper on Halloween of 2008, and it was really the macro environment we were all living under. And I think that's kind of probably one of the things we'll get into. It's that macro behind that drives. It's a common theme behind both gold and Bitcoin is debate. Everything that's happening from a geopolitical standpoint, the always worries about the debasement of fiat currencies. So, as somebody who'd always been in tech, telecoms, payments, this was really exciting to me. And it's really interesting because 2008 were quite a few years after that, and things have gotten a lot better, but there's still so much work left to do.
Hmm. Yeah, absolutely. So, for someone hearing about tokenized gold for the first time, how would you describe DGLD? Them.
So, DGLD gives investors digital ownership of physical gold. So it's not just exposure to the price. It's not a paper claim. It's a token that's linked to physical gold, and it's held and supported by MKS PAMP's physical metals infrastructure. And before I go any further, maybe I should tell about how some of the Lego pieces are put together. Right. So
Yeah.
I'm the CEO of Gold Token SA or
Hmm.
GTSA. This is a Wally-owned company of MKS PAMP, which is one of the world's most sort of horizontal and vertically integrated companies across the gold industry doing everything from the moment gold leaves the ground,
Hmm.
from refining to minting, transforming, selling to mints, institutional clients, trading, as well as B to C outlets. For example, in the US, people might be familiar with Costco Gold. You can buy the PAMP powers, the Costco Gold, the Lady Fortuna tokens that are available there. So really just this worldwide presence across the whole chain of gold. And DGLD is the gold token that we issue. And back to the question of how this really drives digital ownership of gold forward. Like I said, it's not exposure to the price, it's not a paper claim. You actually own the gold. And the difference though is you own the gold, you can actually claim it and redeem it anytime you want, from down to 1 gram to even 1 ton. And that's where the backing of a company like MKS PAMP comes into play.
Hmm.
They have the infrastructure that allows that to happen. And then I think, as many listeners will know, what's the advantage of moving something onto blockchain? It's the 24/7 accessibility of it, it's fast settlement. And what's really interesting now is being able to use gold as collateral on chain.
Hmm.
Because, there's other ways of owning gold. You can have the physical gold. It's really hard to use that for collateral. It's hard if you need to sell part of it. It's hard to do that without, melting it down, shaving it. And you have the
Hmm.
storage costs here with tokenized gold. You don't have to worry about that with DGLD. And then ETFs are also fantastic, but it's very hard to take physical ownership of the gold. And you actually have an ETF is really just a claim on gold. You don't actually really own the gold. So I know that was a lot, but I just summarize it by saying we're taking the world's oldest, most trusted, probably most anti-fragile asset and
Hmm.
making it programmable and useful on chain.
Amazing. That's great. Yeah, you answered a couple more of my questions. I was going to ask you about the difference between what you're doing and then ETFs. So when someone buys DGLD, where is the gold and who's holding it?
So the gold is held in Switzerland by MKS PAMP in a Swiss vault. And that's all already really interesting because I think what was it, Trump, who said he who owns the gold makes the decisions. And so there's been a lot of concerns about where gold is actually stored. And I think having it
Ah,
in a politically neutral country with a long history of stability makes
yeah.
Switzerland a natural place. And that's also, DGLD is issued under Swiss law, and Switzerland has one of the strongest property rights in the world.
Oh,
So,
that's
not
interesting.
saying Switzerland is the end all be all of everything, but has some
Hmm.
really solid points: the strong property rights, the fact that the political neutrality and stability, and having the gold stored here under, kind of combined under that jurisdiction, and then backed by a company, MKS PAMP, that has almost now 70 years of history across this enormous spectrum of the gold business. And that matters because this is not a crypto company trying to get credibility in gold. This is a very well established participant and actor in the gold industry that's using blockchain as a new distribution rail. So it,
Hmm.
it it matters because it's sourcing, it's custody, it's storage, it's redemption, it's liquidity, it's legal ownership. And at the end of the day, it's trust. And this is also why not every token is created equally. Not every gold token is created equally. Not all of
Hmm.
them have the same trust elements behind it. Similarly to, if you think about government bonds, right? An Argentinian bond is probably not the same as a US bond in terms of, am I going to be paid back, and at what
Hmm.
rate? So really, um, what's behind the token really makes a lot of difference.
Yeah, that's a really good point and a really good comparison. So you said digital gold, it's not making about it more speculative, but making it more usable. Can you expand on that and give us a few examples?
Yes. So if you, let's say you want to um, lend your gold out, you can easily lend it through DeFi protocols or direct lending through collateral. One use case that we're exploring is the concept of Lombard loans, which, for those who aren't familiar with it, you can basically use an asset as collateral with your bank to borrow additional money. So all of a sudden, it starts becoming useful because you can actually use it for collateral. And right now, physical gold, for example, if folks are familiar with like Basel III concepts, physical gold has special treatment on balance sheets for institutions that hold it. And we think that there's a really good argument for tokenized gold to have that same special treatment, which means that institutions can have it as a point of resilience on their sheet.
Oh, that's really interesting. Okay. So you've mentioned, so DGLD originally launched back in 2019, but you said that it was a bit early. What are the biggest differences between now and then that makes this, I guess, particularly relevant now?
So a couple of things. First of all, just for context, so I joined, if you will, the project just about a year ago today, before it was fully acquired by MKS PAMP. And it was initially launched as a consortium with a couple of other actors who were more blockchain crypto focused. And I would say, even though MKS PAMP was involved in it, it wasn't as deeply integrated. The initial
Okay.
team did some fantastic things. They managed to get regulatory clarity. In Switzerland, the token was recognized as a payment token with property rights. They built some of the initial technology. It was initially launched on Bitcoin on a side chain of Bitcoin.
Yeah.
Ultimately, though, it was too early. The infrastructure wasn't quite there. The regulatory clarity, even though there's still some work to be done. We have
Yep.
a lot cleaner frameworks,
Hmm.
not just in Switzerland, but in Europe, in the US, and basically globally. So it was a little bit early. And then the team pivoted to migrate the token from Bitcoin onto Ethereum to start trying to capture some of the opportunities around DeFi. But
Hmm.
again, it was a little bit too early, and that was led to the decision to say, "Hey, let's really integrate this and make this part of the MKS PAMP group." So we have all of that institutional 70 years of trusted infrastructure uh, built out across the industry, and now it is a standalone company, but it gives us that opportunity to be a very fast moving, innovative entrepreneurial startup. But effectively, it's almost as if we started 5 months ago, which was when the acquisition was completed. So we spent the first 5 months going around to the market, trying to find out, what are the things that people want to see in a gold token. um, how can we explain the story and the value that DGLD brings to them? And so we spent really the first 5 months on that foundational aspects as well. And now we're starting to look at how do we scale that? How do we scale it across institutions? How do we scale it with retail? We want it to be, institutional grade, but also available to everyone.
Hmm. Okay, nice. Yeah, and how much do you think the regulation has impacted that? You know, we've obviously had MICA in Europe, like you said, but there's still more to come. But do you think that's helping in making, you know, increasing interest from on the institutional side or elsewhere?
Oh, massively, because institutions won't move unless there's clear regulatory guidelines to do so. And now there are the clear frameworks. I'd say tokenized, if we talk about tokenized gold in general, it's still, I think, mostly retail. Institutions haven't dived in completely, but I think if you all the surveys and online things that you read, institutions are now moving into tokenized real world assets, and
Hmm.
it's one of the areas where they're most interested in, because all of a sudden you do have this, they're already familiar with gold. This is not a new asset, and tokenizing a weak asset doesn't make it stronger, but tokenizing
Right.
a strong asset
Yes.
brings a lot of values to it. So they, this is not something they have a tough time getting their head around. They
Hmm.
understand gold, and now if they understand, okay, I can use it for collateral, I can use it for yield, or borrowing other assets that can help me generating, because again, gold doesn't generate yield, but if you use it as collateral, then you can
Yes.
start generating some additional income from it. So it starts to become really exciting. Uh,
Hmm.
institutions, I think, are waking up to this. The regulation is making them more comfortable to be able to also do this. So,
Hmm.
just as inside, Lindsay, like I was looking to, it's interesting if you see some of the other tokenized assets, for example, Biddle or Beetle, however you pronounce it, from BlackRock. It's available to accredited investors or qualified participants, right? Which like that's a high bar, like $5 million
Hmm.
to buy it. And actually, the reason they didn't do that, or the reason they did that, from what I understand, it wasn't to be exclusive. It was just because the way things are set up, uh, they didn't have to go through as many regulatory hurdles to
Ah.
operate to that segment of clients. And then, on the other hand, I think it's Frankel Templeton's Benji. They did go through the pain of that, but
Hmm.
it's a bit of a shame, because that's one of the things about blockchain and tokenization and stable coins, and we're working on with Libra and DM, and now hopefully with DGLD, is becomes accessible to everybody. If you want
Yes.
to buy, $10 worth. We see in our group company in India, people buy, like, this gold accumulation program. They're buying 10 cents of gold a day. So you should be able to buy really small fractional amounts,
Hmm.
participate in it. It shouldn't be exclusive. But again, that gets into, I think institutions want to be compliant. So the super,
Hmm.
and so you have to approach the market that way. And
Yeah.
again, I can't really speak for them, right? But I think the other aspect too is it is new technology. So when you do roll something out at a mass scale, you want to make sure that it is safe for everyone
Hmm.
to use.
Yeah, absolutely. No, I love that you brought that up because it's been really great kind of seeing the evolution of blockchain in that sense because when it started you you hear a lot about, well, this is, as well as being sort of a technology that it fixes a lot of things, or improves upon traditional systems. It gave access to um, banking to, like, a whole group of people who were just unbanked. So for them, it was just accessing banking, that most of us take for granted. And now with tokenization and RWAs, we're seeing that sort of democratization go further in giving people access to, whether it's being able to just buy assets,
Sorry.
whether it's being able to buy things at a lower cost, not having to have these bigger buy-in, you know, uh, rates, or just accessing financial products that are traditionally only available to, like you said, accredited investors or people with higher dollar amounts. So this is sort of the next iteration of that. So you mentioned about you moved from a Bitcoin side chain towards Ethereum and Base. What has that unlocked that wasn't available before?
Well, yeah, I mean, DeFi, the big move actually in general from Bitcoin to Ethereum was smart contracts and being able to make it programmable. And then launching on Base uh, allows you to have lower cost transactions, and then also very vibrant community. And our plan is for this to be a multi-chain asset as well, and to bring it onto other chains. It should be accessible as far and as wide as we can make it. But again, that takes time. We're currently looking at a way to do that, basically by launching natively on each chain
Okay.
until bridging, um, until we can all be more confident in bridging.
Right. Yes. Or other solutions pop up. So we touched upon the macro environment. Do you think inflation concerns, geopolitical instability, does this make this a uniquely strong moment for digital gold?
I think, well, there's actually, Lindsay, I think there's kind of two aspects to it. One is what you just said, which is the macro for gold. And that's definitely driving gold in general. The geopolitical uncertainties, constant concerns over inflation. I mean, just look at the charts, for example, of the value of the dollar over the last like 100 years, right? It just goes
Yeah.
a certain way. So,
Yeah.
um, so there, it's kind of heated up this the macro tailwinds, but then the other tailwind is infrastructure, which is finally here for tokenization. So it's that combination of infrastructure, actually regulation as well, and then the macro. So it's a perfect tailwinds to be building this out and launching.
Nice. Yeah, that's awesome. I know timing can be everything, right? So, in terms of your users, can you give us an idea of the typical DGLD user today? Are they crypto native traders or traditional gold buyers? Who's using who are your users?
So it's built for everybody, and again targeted for institutional investors, certainly Web3 foundations, blockchain foundations, family offices. However, today I would say the most users of it are crypto native retail, and typically it's in general this is an interesting industry. Retail tends to lead, and then institutions tend to follow. But saying that, we are seeing institutions now that are starting to become more and more interested in using tokenized gold, using it for collateral, for repo agreements, and Lombard loans, and just having it. It's one of those things you should have on your balance sheet.
Mhm.
And the question is, do I keep traditional gold on my balance sheet, or now do I put tokenized gold, which, I've got it as one of the pillars of my balance sheet, but now I can do other things with it that I couldn't typically do before.
Yeah. And you mentioned about people buying, 10 cents worth of gold in India. Are there any other sort of use cases that have surprised you about how people are using this?
Well, I'm not sure in terms of really using, but I think one of the psychological elements that is important is, and again, this is really a difference between ETF or trying to go in and buy your gold and figure out, do I bury it in the yard or where do I store it? But the fact that with DGLD in particular, I know that if I want to, I can get the physical gold, whether it's 1 gram
Yeah.
or, if I've got a whole, 400 ounce or 13 kilogram bar, that I can actually take possession of it. And that's one of the uniqueness of DGLD with MKS PAMP is not many companies have the ability to have that infrastructure to
Hmm.
provide those logistics worldwide. So just this psychological idea that I am the owner, this is a physical asset that I own, and
Yeah.
not only can I use it on the blockchain, but if I really want it, I can get it.
Yeah. Absolutely. So how are we getting the gold? Are we hopping on a flight to Switzerland? Like what does that look like to get our gram?
So I won't name names, but there's other large actors in the space where that is the case, right?
Oh,
You
okay.
do have to get on a
Really?
plane and come to Switzerland if you want to get your gold,
Okay.
maybe you have to. The minimum amount might be like $100,000 worth. In
Oh.
our case, it's super simple. It ships worldwide. You can go through depending on how much you're redeeming, right? If you're redeeming a full bar, which is worth several million, then there's additional compliance AML checks, but it can be delivered worldwide, anywhere in the world. And then if you want to get down to 1 gram of gold, one of our e-commerce platforms, part of the group companies, is goldavenue.com. And you could easily redeem DGLD tokens for your physical gold there. And again, can be shipped basically worldwide. And I forget what I was going to say about that, but yeah. So again, just that logistics infrastructure um, is really hard to replicate, and that's again just one of the beauties of working with an established player in the industry that is, again, doesn't have to build all this out, but is really just now looking to use blockchain as a new distribution channel.
Hmm. Yeah, that's incredible. I was sort of imagining going to some kind of outlet or, I don't know, gold shop, but that's amazing. It just comes straight to your door. So, what becomes possible once gold can move through crypto markets and apps the same way that stablecoins do today?
So, right, like you said, they can move through the same way that stablecoins do, but again, it's a little bit different.
Hmm.
Stablecoins are really for settlement and payment. Gold is, again, it's physical gold, it's an asset. And what's interesting though now is you can use it if you want to. You could use it for, there's a sound money movement. So if people want to settle debts or claims in tokenized gold, they can do that. The other thing is, like I mentioned before, that you can now use this as an asset in lending markets and earn interest rates from using it as collateral. And that's really hard to do with physical gold, or I don't think you can lend your ETF out, for example. And then
Right.
it just, one of the things we always talk about is composability or programmability. And I don't know what the future is going to bring, Lindsay, but we see more and more transactions that are being done by agentic AI. And
Yes.
here's
Mhm.
something that always puzzled me, right? Like, one of the initial use cases for stablecoins was in the initial like ICO and crypto boom was, where do I park my funds between speculative trades? But here's the contradiction. If you're in crypto and Bitcoin, you probably are biased a bit against fiat currencies.
Mhm.
So why do you want to park your funds temporarily in a fiat currency if you're concerned about the debasement of that or the backing of it? And wouldn't it make more sense to park those trades in a stable asset like gold, for example? So I just
Yeah,
always I
it's
found
very
that
true.
kind of like a contradiction somewhere.
Yes.
Um,
Yes.
yeah, I mean, just kind of back to what we were saying before, right? And that's the beauty of cryptocurrencies and blockchain. It starts to become accessible to
Mhm.
all, and just because it should be possible for somebody to like invest $5 in SpaceX, right?
Yeah.
If they wanted to, they shouldn't just have to be. It shouldn't be
Mhm.
excluded to the few. So the point is, can we make it more democratic?
Mhm.
Regulation, again, I think it's super important, and it's not really it's basically the foundation for growth, right? If you have healthy regulation, healthy frameworks, it builds the foundation for growth. Um, Obviously, if the regulation is antagonistic, that's not good. But ultimately, right, that's the job of a country, of politicians, of regulators, is let's make sure that our citizens are safe, that their financial health is safe.
Mhm.
Again, this leads into all kind of interesting discussions, right? Because there's also like, and this is not new, but there's just been growing distrust in central governments, in central banks, health institutions, media institutions. So we're in this collective experiment. Does decentralized governance, does verify, don't trust, does this the new paradigm that can kind of work? But the point I'm making though is that regulation is very serious. KYC, AML are super serious. What
Yeah.
I and coming from the background I have in zero knowledge proofs and privacy, where I hope we get to is,
Hmm.
right now, and I'm not the only one saying this. People will recognize this every time you onboard to a new institution. You give your data all over the place, right? And sometimes it gets hacked and leaked. If you owned your data only and didn't have to propagate your data everywhere, but could just provide proofs that you are who you say you are, and only those proofs are propagated. And I think that's where we can get to with digital ID, with
Yeah.
blockchain, and in
Hmm.
general, that's going to help. But again, there's a lot of layers to be weeded through before
Hmm.
we get there.
Yeah,
So,
I like that. Like a nice compromise so that we're still doing these important things, like you said, because AML and thing, it's
yeah.
obviously very important. And it really helps you know, track down and you find bad actors through that. Um, but yeah, doing it in a way that's not you can still retain your data.
Right, and the other thing too is, as people see, it's when monetary systems are weaponized, right, and that drives um, people
Hmm.
to use other systems. So, it's finding the right balance between having a good governance structure in place, but also not having it open and not being abused and censorship
Yeah,
resistant and all those things.
yeah, exactly. All right. So, I guess pulling back the curtain a bit, talking about your experience, what do you think's been the biggest shift between working in like traditional finance companies, and then transitioning over to crypto for you?
So again, I think it's just this uh, sort of open spirit of we're building something. These are the rails for the future.
Hmm.
Again, the existing financial rails took many years to solidify, and I think we're still at the early stages of blockchain and crypto infrastructure. But it's definitely, it's the wave of the future. This is not just me saying it, but you just see the multiple, the plus 100%, 400, 500% growth year on year of more and more assets being tokenized and moved on chain. And it gets to the core of where we're moving as a society, right? Because
Hmm.
think about resources and being able to fractionalize, share them in a better way. So it's just, for me, this is a completely natural evolution, and I'm really excited to be part of it with DGLD and
Hmm.
taking one of the most time tested, trusted assets on chain. Uh, I don't think there could be a sweeter spot to be in right now.
Yeah, absolutely. Yeah, and it must help when you're talking to whether it's institutions or it must be nice that it's people understand gold already. I bet that's perhaps it's a little bit easier than trying to explain something super technical and new that people just have no concept of. At least you can start with a place where, like, okay, people are with gold and its value.
We've looked at, for example, you look at the ETF market, which initially started, what, 15, 20 years ago, I think. And there was a lot of complicated ETFs that came out, but eventually disappeared. And I think, it's similar for tokenization. You have to keep it simple,
Hmm.
keep it with a simple asset that people understand, simple use cases. And even there's one of the challenges in crypto, right, is there's so much noise trying to
Yes.
understand what's the signal to the noise ratio, what has real value. And what I've come to realize, like, if I don't understand something, then there's probably something that doesn't make sense. And
Yeah.
I think most people should have the confidence to think that too, because
Hmm.
sometimes you hear these things that sound just incredible. It's got to be too good to be true, and it usually is. But
Right.
again, I
Yes.
think we just come back to an asset like gold and physical gold and DGLD, and people get it, they trust it.
Yeah.
It's backed by a company with 70 years of experience across the whole logistics spectrum. So, the fundamentals remain important.
Yeah, absolutely. And so that my next question was going to touch on, the speculation and just the nature of this industry, which, can have its up and downs. There's lots of noise, lots going on. How do you stay focused, with building your product and just navigating through those, sometimes volatile cycles?
Yeah, so again, gold is actually has seen a little bit more volatility in the last year or so, but a lot of that's driven by the macro tailwind. But at the end of the day, it's a stable asset. It's not that volatile
Yeah.
compared to other assets. So that allows us to keep focused, and we just
Mhm.
know there's a solid use case here, right? Again, we're not inventing some new algorithmic
Yeah.
exchange mechanism. It's physical gold tied to the spot rate of gold. You can lend it, you can borrow it. So those are the way I approach it is like, let's keep it simple. Let's make sure
Yes.
people can understand it and not worry too much about the noise.
Yeah, there you go. And do you think there are any common misconceptions that people have about tokenization um, or even gold? Or is that part good?
Well, it comes back to you can token. I was having this discussion with somebody the other day who didn't really understand a lot about crypto, and he's like, "Well, first of all, just explaining that, yeah, there are regulations that you need to follow, and because he's like, can't you just tokenize a banana and sell that?" And well, yes, you can,
A
but
banana.
yeah, but it's
Okay.
like if as I said before, if you tokenize a strong asset, then tokenization is going to work, and there's going to be a use case for it. If you're tokenizing a weaker asset, maybe it doesn't work for and that gets down to how big the market can become for an asset. And I think
Mhm.
that's where gold has a lot of potential in terms of liquidity and scalability. But if you tokenize a smaller, like let's say real estate or a plot of ground, right? There's value in that, but
Mhm.
how liquid, how tradable is that really going to be compared to tokenizing an asset like gold? Now, those things are perfectly fine, and I'm glad people are doing those kinds of things. But again, I think tokenizing something that has a much bigger scale to it is
Mhm.
ultimately going to have a lot more traction.
Yeah, absolutely. And looking ahead, is there anything that you're particularly excited about? Whether it's, what you guys are doing specifically or just the space in general?
Oh, I'm quite excited about the things that we're working on. I can't reveal them yet, but we have a lot of good things under the hood that hopefully in the next 1 to 2 months we'll start to be making some more announcements as things start coming out. And in general, I'm excited about the industry. I'm excited about the improvements in technology, the improvements in the user experience,
Mhm.
the the now that we have clear regulatory frameworks that are getting better. So it's compared to where we were back in the days of DM and Libra, like things are just a world of difference.
Mhm. Yeah, absolutely. Oh, well, that's exciting. Watch this space then, everyone. Um, is there anything that we didn't cover that you would like to cover before we wrap?
No, I think we covered everything that I would have liked to have mentioned. Thank you, Lindsay.
Okay, wonderful. Yeah, thank you so much for coming on the show. This was really interesting to dig into this. I think it's an amazing project. Like you said, like bringing one of the oldest trusted assets and bringing it on chain so people can use it and put it to work. All right, that's it for today's episode of Token for Your Thoughts. If you enjoyed the conversation, be sure to subscribe and follow the podcast for more conversations with the founders and leaders building the future of crypto, Web3, and AI. We'll see you on the next episode.